For those of you arriving, we're just going to give a moment here to let everyone get in the room, and we'll get rolling shortly. All right. Well, I think for the sake of time here, we can get started. So good morning, everybody. My name is Mark Shields. I'm with Business. I want to thank you all for joining our webinar today. At BusinessLink, we take pride in providing great services to all entrepreneurs, and we are honored to provide specialty services to our immigrant populations and to Indigenous entrepreneurs and Indigenous communities. We are always actively inclusive in our cultural understanding and awareness of the histories of our country. With that, we will start this event with a land acknowledgement to recognize all of Alberta and all of you who are joining from different parts of our province. We want to acknowledge that in the province of Alberta, we're situated on the traditional territories of Treaties 4, 7, 6, 8, and 10, ancestral homeland of diverse First Nations groups, Métis, and Indigenous people whose ancestors have walked this land since time immemorial and whose histories and cultures continue to influence our vibrant community. We pay respects to the Indigenous people of this land, present and future, while we recognize their cultural heritage, beliefs, and relationships to the land on which we reside. So with that, thank you again for joining us, along with Derek Hopfner here, who is going to present Legal Bootcamp for your business. We'll just remind everyone for today's webinar, please remember to keep your audio off during the presentation. If you would like to ask a question during the webinar, please click the chat in the meeting controls and type a message into the chat box. Both Derek and I will keep an eye on questions rolling in there. It's my pleasure now to introduce our webinar presenter today, Derek Hopfner. Derek is the co-founder of Founded, a leading legal automation platform used by over 1,000 businesses, law firms, and large enterprises. Founded automates legal work, including incorporations, legal documents, and ongoing compliance, providing a fast, intuitive, and collaborative experience. Previously, Derek was a business lawyer in Edmonton and held director positions in several nonprofit organizations. Yeah, I'm sure we're going to get lots of great stuff from you today, Derek, so go ahead and take it away.
Wonderful. Thanks so much for the introduction, Mark. So it looks like we have 42 people already collectively on this webinar. I think I've heard there's over 100 people that have registered, so this is going to be a great session. We only have an hour today, and I'm going to be mindful of that as we go along. So a few housekeeping matters. If you have questions, please, as Mark indicated, indicate your question through the group chat function, and we're going to be answering questions as we go along. If we don't hit all of the topics today, no worries. We'll be providing a copy of the deck that can be, you can get a copy of it after the fact if you'd like. And really, this is for you. I know we're in difficult times right now, and entrepreneurship is actually more popular than ever. So it's really a wonderful time to get a good understanding of the legal side of your business and see how kind of it can affect you. And that's what the whole goal is for today, is to help all of you. So with that, let's get rolling. We don't need to do any more introductions. This is what Founded looks like. You can take a look at it after the fact if you'd like. So let's talk about the agenda. We're going to cover 4 main topics today. We're going to cover business structures and operations. We're going to cover intellectual property and brand. Going to cover employment agreements and contract agreements, and then end very quickly on what to think about when you're operating a website for your business. Okay. So let's dive in and talk about business structures. So this is the first part that you want to be thinking about when you're operating your business. So if you are just starting out in day one, or you're just thinking about your business, or maybe you've incorporated already, you will have a business, and it will be either a sole proprietorship, a partnership, or a corporation. Okay, these are the most common business structures here in Canada. What we're not going to talk about today is non-for-profits or nonprofits. I believe there's other sessions that are available through Business Link on that topic. So let's imagine for a second that you're operating your business and it's just you by yourself, okay? That would sit you squarely in the sole proprietorship realm. Now, the interesting thing about a sole proprietorship is you don't need to do any registrations or anything like that. Just by virtue of the fact of you operating your business means you are already created a sole proprietorship. So as you can imagine, one of the main benefits of a sole proprietorship is that it's super simple, okay? You don't need to do any government registrations. You don't need to file separate taxes or anything like that. So you're operating your business, you make money, you're putting all of that money and your expenses and things like that on your personal income taxes, and things are simple, okay? Connected with that, there's no money to start when you're a sole proprietorship. And interestingly, all profits and losses go to you directly. So if you can imagine you have a separate employment income coming in, and let's say for your first year as a sole proprietorship, you actually lose money, well, then that loss would go on your personal income tax return and offset against your salary. So you would actually be paying less taxes, okay? The one thing that can exist in terms of registrations that people will do is what's called a trade name registration. So if you wanted to use a name that's unique, that's different than your personal name, then you would go ahead and register what's called a business trade name. They're not very expensive, and then that would indicate to everyone who's doing business with you that, you know, if it's Rocket e-commerce, let's say that's my trade name I want to register, that is then registered to me specifically. One of the things with the sole proprietorship is your personal life and your business life are all within the same sphere. Okay, so there's no difference between you operating your business and you living your personal life. And where this becomes a little bit complicated and, you know, is one of the disadvantages of a sole proprietorship is if something bad happens to the business, so let's say the business is sued or there's a debt you can't pay, it's not just the business property that can be kind of taken away, but it's, you know, your personal bank account, your house, your car, all of this stuff is at issue because you haven't separated your business life from your personal life, okay? And then connected with that on the second item, the result is that the business owner has unlimited liability because, again, all of your personal assets would be at issue. And then finally here, one of the last downsides we have is lack of continuity. Okay, and what we mean by here is because you haven't created a separate legal entity when you're a sole proprietorship, if you decide to stop operating, well, then that business and the sole proprietorship will automatically stop operating as well. You can't really transfer it to anyone else because it's intimately tied to you. Okay, it requires you to be operational. Okay, so takeaway here on a sole proprietorship is it's really simple. You file your own income taxes, but your business life and your personal life are all still together, and that's the biggest downside. So now let's get to partnership. So as you can see from our first slide here, you know, the difference between a sole proprietorship and a partnership is just there's more people involved, and that truly is the difference between a sole proprietorship and a partnership. Okay, again, it's super simple to set up. Both partners, so you can have two or more, will be just indicating, you know, how much money each partner makes, how are the expenses going to be allocated, and then that again goes on your personal income taxes. Okay, exactly the same as a sole proprietorship. There's no kind of money that's required to start. What is really common in a partnership example is to do that partnership name registration or a business trade name registration, because there'll be more than one party involved and you'll probably have a unique partnership name for your business. Again, all profits and losses are going to you directly. So it has that same benefit as the sole proprietorship. And again, this is pretty much an exact mirror of the sole proprietorship examples. The downsides are also the same. So again, you haven't separated your business life or your personal life. And as a result, if something goes bad with the partnership, it can affect your personal property, your personal bank, and things like that. Okay, so really important to understand. The other downside with a partnership is it is reasonably common to work out a partnership agreement, because there will be more than one of you, on how revenue will be allocated, how expenses will be allocated between the partners, etc. So things to keep in mind. One item I wanted to highlight with a partnership is the risks are almost exaggerated because you're doing business with someone else. And what I mean is the following. If Mark and I create a business together and we're going to start a partnership, and let's say we create a e-commerce store on Shopify, and we don't do any registrations, we're just operating as a partnership, and it starts going really well. That's wonderful. Now, one of the things that may happen though is, let's say I had a prior business debt that I haven't paid. Well, what can happen is the bank can come in and realize that Mark and I have created this new partnership, and actually go in and take the profits and things like that from that partnership, because both Mark and I would be 100% owners of that entity. Okay, so it really is important to understand who you're getting into business with. And then it is reasonably common that, you know, if you are looking at a partnership, you'll probably be looking at an incorporation reasonably quickly after that. Okay. And then we get to the corporation. So we have a question here about trade names, and I'm just going to answer that quickly. So trade names are registered in the jurisdiction in which you operate. So it's not even around Canada. So if you register a trade name in Alberta, the trade name would only be in registered in Alberta. And also to make a point, business trade names give you zero protection. So it's not like if Mark and I have registered the name Rocket e-commerce, all that means is we have registered that name to us. Someone else could go ahead and use that name in their day-to-day operations. Okay, so business trade names are more like a yellow pages, where it just says this is your name and this is who owns it, rather than any sort of substantial protection around the name. Partnership owners, ownership around partners can differ depending on the partnership agreement. Okay, Lynn, so great question. That's something that can be decided between the partners. And ownership is kind of a weird thing, because again, each party can own 100% of it in a liability sense, which is why I gave that example before. Okay, so let's talk about corporations. So first thing to understand with a corporation is that when you incorporate a company, you are creating a new legal entity. So when you go and you do the paperwork, you know, whether it's through you know, a website like Founded or through a lawyer or something like that, one of the things that you will get back is what's called a certificate of incorporation. And this is going to be very similar to a birth certificate. You have created this new legal entity. Now, a corporation doesn't get to vote, but they do get to open up their own bank account. A corporation can borrow money in its own name. A corporation can enter into contracts. And, you know, the corollary of all of this is a corporation also has to file its own taxes. Okay, so you can no longer file your personal income taxes for your corporation. You would have to do a whole set of different taxes for your corporation. And this is the main benefit when it comes to a corporation, is you've created a separate legal entity. So all of a sudden, you'll recall with a sole proprietorship and partnership, your personal life and your business life were both together. When you incorporate, you've separated it. And your business life is all of a sudden this separate thing, and it's not tied to your personal property. So if something goes wrong and someone sues the business, the only thing that the people that can sue can take are the business property. They can't go underneath into the owners of the company and grab money from the owner's personal bank accounts. The other things kind of flow from this as well. Ownership is transferable. So again, because you've created this new legal entity, there's units of ownership, and you can buy and sell these units of ownership, which are called shares, to other people. It's not as liquid or as easy to transfer as like public stocks, or stocks that you can get on the stock market at all. But ownership is transferable. If you wanted to borrow money or if you wanted to raise money, you will need to be incorporated. And there's some tax advantages that we're going to get into shortly. And two more pieces on the advantages side. You'll recall when I was talking about sole proprietorships, one of the difficulties is if you decided to stop operating a sole proprietorship, it just stopped existing, right? And with a corporation, you can decide to stop operating and have someone else operate it, or have someone else own it, and that business entity can continue to exist. The last thing that we see with an incorporation is sometimes when you're working with certain clients, they expect to be working with corporations. So there's a certain level of professionalism and like you're getting larger contracts when you're incorporated. So no one's going to give you a contract just because you're incorporated, but someone might decide not to give you a contract, even if you've checked all the other boxes, because you're not incorporated. Okay. So what are the downsides of incorporating? Well, the big one is the cost, and the cost exists in a few different elements. It obviously costs some money to start a company. So if you were to incorporate through a service like Founded, the cost is about $600, including all your government fees. If you were to work with a law firm, the cost would be somewhere near, I'd say, $1,300 to $2,000. And there's definitely benefits to both. Okay. The other cost is kind of on an annual basis. So because you're going to be filing separate income taxes, it's reasonably common to be hiring an accountant to do the financial statements and the tax returns year after year. So that costs money. And then there's some minimal ongoing, what are called annual legal returns that need to be done each year to keep the company compliant from a corporate perspective. Okay, so takeaway here for corporation, you're creating a new legal entity. And because of that, the benefit you get is limited liability. One of the questions that we get quite often is, well, what is an LLC and how does that work? Well, an LLC is an American term, and we don't have LLCs in Canada. In the US, they have LLCs, they have C Corps, they have S Corps. In Canada, we just have a corporation, and it is a limited liability corporation, but they're not called LLCs. Lynn, you're asking if we can have a legal boot camp on corporations. This is exactly what this is. So there won't be anything else different in the corporation legal boot camp in the future. This is all going to be super helpful for that. Maz has a question. Where would social enterprises fall in? Great question. Generally speaking, social enterprises can exist in one of two business structures. Business structure number one would be a corporation, but with a slight tweak to it, and you might do what's called a B Corp or a B Corporation, a benefit corporation. And there's some little changes that would need to be done at the incorporation stage to make that change. And we help B corporations through Founded. The other option sometimes is a nonprofit. So it just depends on the particular structure you're looking at. DT1, for articles of incorporation, what do we write in for the class of shares? We're going to get into that, DT1, and I'm going to explain to you all the different things you need to think about when incorporating, but it sounds like you're doing it on your own, and I'm going to explain to you what you might be missing so that you're not doing half a corporation, okay? So we'll get to that. Diamond has a great question. What is the average annual cost for a corporation? It really depends on your accountant costs. I would say an accountant, year after year would be somewhere between $1,000 and $2,000. Sometimes quite a bit more if you're getting to be a larger company. So yeah. And then in terms of the legal side of things, I think you could look at about $250. Okay, minute book we're going to get to, Kathy, so great question. We'll hold off on that. And then IP Singh has a question. What is the advantage of having a CCPC? So we're getting into acronyms. CCPC means a Canadian controlled private corporation. All that means is a corporation that's registered in Canada, so it can be any province, but the owners of the company, a majority of them need to be Canadian. So they would either need to be Canadian residents, or the corporations that own that corporation would need to be Canadian companies. The benefits are around taxes. There are tax benefits for small businesses that are Canadian controlled private corporations. And the next time you have an accountant do a webinar, you should ask those questions, because they'll be able to get into the details about what the benefits are specifically for small businesses that are CCPCs. Okay, so
maybe ask one more quick question, Derek, just because I know
sure.
it's a common one we get with clientele at Business Link around structure, and it's, what if I start as a sole proprietor and then decide to turn this company into a corporation? Is that difficult or complicated or not allowed?
Perfect question. Wonderful question. So is it allowed? Yes. Does it happen every single day? Absolutely. Okay. So it is reasonably common to start as a sole proprietor or a partnership and then transfer over time to a corporation. So that can get complicated. If it is a very small business with very few assets or property or contracts, then the change to an incorporation is seamless. It doesn't really require anything. Where it becomes difficult is if the sole proprietorship or partnership have accumulated a lot of their own property. So let's say, for example, I'm a sole proprietorship and I'm running a landscaping company, and I've purchased 2 trucks. Let's say those 2 trucks are worth $100,000. If I want to incorporate that business I've started as my landscaping business, I want to incorporate it, I would also want to bring the trucks along with me. Now, you can't just gift $100,000 of trucks from a person, which is you, to your new legal entity, which is your corporation. You have to exchange value, and there's tax consequences and things like that. So you can imagine, in the scenarios where there's actual property involved and you want to push that into the corporation, that's when we'll definitely need to hire an accountant and a lawyer to do a tax rollover, Section 85 tax rollover. And that's when, you know, the experts come involved, and your cost to incorporate will, in those instances, likely double, triple, quadruple. Okay, so you know, I think it would be reasonable to assume something around $2,000 to $4,000 when you have a Section 85 rollover that needs to happen. But presumably you have the money because you've accumulated hundreds of thousands of dollars of property, so you don't have to worry about it. We have some other questions that I'm getting both privately and publicly, so I'm just going to hold off on them because we're going to cover quite a few of them in the next couple slides, and they're great segues. So what I wanted to cover here is, when is the right time to incorporate? Because that's a big question that we get. You know, I'm operating my sole proprietorship. Should I be moving to incorporating? Should I do it today? Should I incorporate in a month from now? What about in 2021? Well, there's 2 main reasons to incorporate, in my opinion. There's tax reasons and there's liability reasons. If you talk to an accountant, they're going to tell you all the different tax advantages that you're going to get from a corporation. And if you talk to a lawyer, they're going to tell you all the different reasons why it's risky to operate a business when you're not a corporation. Okay, so let's dive into both of these, and it should help inform you. What we're not going to do today is go over every single example, because we have 60 people on the call today, and we just wouldn't be able to do that. But this is supposed to be able to provide you a framework for helping your own business as to decide, does incorporating make sense for me? So let's start with liability. What we have here is kind of a liability spectrum. Okay, so on the left-hand side, we have things that are low risk. So we have things like a marketing consultant, or maybe you have a shop that does makeup, or things like that. These are examples where the business risk would be much lower. So your reasons to incorporate would be less from a business risk perspective. And then if we look at the other end of the spectrum, what we have are industries like home renovations, moving services. You can imagine for all of these types of businesses, the business risk is much, much higher. Okay, so home renovation, you can easily imagine that something goes wrong and then the homeowner would sue you. For a consumer good, you're selling something, someone might ingest something incorrectly. These are all examples where if I was operating in these types of industries, I wouldn't start day one without incorporating. Okay, that would be kind of if I'm operating, then I would incorporate right away. So try to think of where your business might sit in that spectrum, and let that be a guide for you to determine, should I be incorporating sooner, or can I hold off till I make some more money? Item 2 here, taxes. Okay, so this is where the accountant stuff comes in. I am not an accountant, but we do get so many questions around how do taxes work for corporations that I really try to provide a very, very high level so that all of you can understand, just generally speaking, how taxes work when you're incorporated. So first, let's understand how do taxes work when you're a sole proprietorship or partnership? Well, the exact same. You make money, you put it on your personal income tax, and you file it. Okay. So likewise, when you make money as a sole proprietorship, you can use that money right away and use it for rent, use it for groceries, use it for whatever you want. When you are incorporated, the corporation makes the money, and you can't just use your corporate credit card for groceries, for rent, or for things like that. You have to draw the money out of the corporation to you personally. And you can do that one of two ways. You can be an employee of your own company, or you can draw out what are called dividends. And dividends are a way of bringing money out of a corporation when you are an owner of the corporation, a shareholder. Okay, so the way it works for corporate taxes is money that is taxed at the top level, at the corporation level, is taxed at a lower amount than your personal income taxes. So one of the downsides of being a sole proprietor is you make a bunch of money and you have zero options. You put it on your personal income tax, you're taxed what you're taxed, and that is what it is. When you're in corporation, you have some options. Maybe I don't take all the money out for my personal use. I leave some money in the corporation, and that's when you're able to really see tax savings from the corporation. So, there's a lot to get there, but at the end of the day, there's more flexibility when you're incorporated, and there's the potential of lower taxes if you're able to keep money in the corporation and not draw it all out personally. The second example when it comes to taxes is around capital gains. So a capital gain is, let's say you start your company and it's worth $10, and then you sell your company in 2 years and it's worth $100,000. The difference between $100,000 and $10 is your capital gain. Typically, you would have to pay taxes on that capital gain, but everyone gets a lifetime capital gains exemption of approximately $860,000. So if you had incorporated at the beginning, and if the increase in value of the corporation, of the business, was through the corporation, then you can realize and take advantage of your capital gains exemption by not paying any taxes on the increase in value. So you can imagine the potential for a tax savings is actually hundreds of thousands of dollars at the time of sale. Now, there's a lot of conditions that need to happen for a capital gains exemption to qualify, but one of them is holding shares in a company of that business. Okay. Great questions coming in. Brenda, I plan to incorporate when I start my bookkeeping business next month. That's awesome. Caroline, if you're in the services industry, let's say architecture or engineering, is it okay to start with a partnership first? So interestingly, architecture, engineering, medical, legal, accounting are all what are called professional corporations. So a lot of what I'm talking about just doesn't apply, especially as it relates to liability. Professional corporations don't get the same liability benefits as regular corporations. they do get the tax benefits. So this is, if you are in a profession like that, it would make a lot of sense actually to speak with an accountant to see when it makes sense, because almost all of the motivation to incorporate a professional corporation will be driven through tax reasons. Okay. So let's talk about the incorporation process. We have about 3 slides on this, and this is all covering some of the questions that we had before. One thing I want everyone to take away today is everyone probably knows that you can go to a registry office and get the initial paperwork done for an incorporation. Please understand that that is only step 1 of 2 steps. Okay, that is what I've listed here as the government step. And when you do the government step, you're going to get the certificate of incorporation and the articles of incorporation. Step 2 is the corporate organization documents, or there was an earlier question, these are also considered the minute book documents. These are the documents that are absolutely legally required to prove who owns your company, who are the directors of your company, what are the rules or bylaws of your company, and just making sure everything is set up correctly. If you don't do step 2, you won't be able to take advantage of dividends. You won't be able to take advantage of the capital gains exemption. These are all things that are prerequisites to getting the full suite of benefits of a corporation. So the question we get, are they really necessary? Yes, they're really necessary. It does not depend on the size of your business. If it's just you, you still need the minute book documents or the corporate organization documents. If you work with a lawyer, if you work with a system like Founded, you will get both of these things done at the same time for a really affordable price. The biggest difference between them, when you work with a lawyer, you're going to get legal advice. And there's no online platform like Founded that can ever provide legal advice. So a lot of people like that advice portion, which is great. Great question, Kathy. Can you do the corporate organization documents yourself? I would probably recommend you not do them yourself. I would use a system like we've built on Founded, or I would work with a lawyer. There's about 50 to 60 pages. So unless you've done it before, you just wouldn't be able to prepare them. Is there a time frame? Yeah, so it happens quite often where people don't realize they need to do that, and you can do it after the fact. Okay, and we can help businesses do it after the fact on Founded as well. So the other thing I wanted to cover right now is, what should you think about when you're incorporating? So the things that you should be thinking about are the following. You want to be looking at, let's start with the name. Okay, when you're incorporating a company, you have 2 options. You can choose either a numbered company, which is a randomly assigned number, or you can do a business name, which is kind of fun. Typically, incorporation names have 3 components. They have a distinctive element, a descriptive element, and a legal element. So if we are going to use my own business as an example, the distinctive element is Founded, the descriptive element is Technologies, and the legal element is Inc. Now, when it comes to the legal element, Inc., Ltd, Corp, there is absolutely no difference whatsoever between any of them. So go ahead and choose anyone you'd like. What else can I say about names? The other thing you should think about at the naming stage is, number one, it can't be extremely similar to another business that already exists. And number 2, think about website domains to make sure that there's one that you're happy with, because it's more often than not, you're going to want to have an accompanying website for your business. So you want to make sure all the different parts kind of come together in that respect. The second item I have here is share structure. Okay, and this is one of the questions that we had earlier. Share structure is actually done at the government stage. Okay, the share structure is the types of shares that the company is allowed to have. So if you were to do the share structure on your own, you would typically only have one type of share. If you work with a lawyer, if you work with a system like Founded, it would be more common to have 2 or more classes of shares, where you have a bit more optionality as it relates to the types of owners you can have. So for example, on Founded, we default everyone to a voting share class and a non-voting share class. So you might bring on an owner in 2 or 3 years and you want them to be an owner, but you don't want them to vote. Okay, so that's one of the nice things about doing it right from the start. Then we get up to shareholders. Okay, shareholders, it's a really nice and simple name. Shareholders, they hold the shares. What are shares? Shares are the units of ownership of a corporation. So shareholders are the owners. Okay, and the shareholders then appoint and vote on who the directors are. The directors, every company in Canada will have a board of directors, even if it's just one. And the directors will sign off on some important legal documentation. They're also going to be involved with a lot of the strategy. And then the directors are going to be appointing the president, the vice president, secretary, the chief executive officer, as the officer positions. If it's just you in the company, or if there's just 2 of you, both of you will probably be shareholders. You'll both appoint yourself as directors, and then you'll both appoint yourself as officers, and that's totally normal. There's nothing strange about that whatsoever. Business names that are outside of Canada won't affect this whatsoever. Yeah, when you are doing the, these are just some questions that we're getting right now. When you're doing the name, one of the things that you have to do, which again, a lawyer will do for you or Founded, is a search at the same time. And it'll only look at Canadian sources for the search, okay? We actually have a free business name search on our website. You just click the Get Started button and you can search as many names as you want to your heart's content, and it can tell you other names that are similar. Okay, so that's it for the incorporation and business structure stage. So, you know, I'm cognizant of the fact that we're at 1:40, so I want to make sure we cover business operations next. Can you please repeat? Well, DT1, great question. Can you repeat the classes of shares? I would highly recommend, I guess, that you don't do it yourself unless you've incorporated the company on your own, because it's not something I can communicate just simply here. There's, you know, dozens of pages of documents to get these things correctly. So I don't want to make it sound like it's just a few words and then all your documents will be correct. So let's get to business operations. So what we have here that I wanted to talk about is GST. Okay, so GST applies whether or not you're a sole proprietorship, you're a partnership, or a incorporated entity. And the way it works is if you have made in revenue $30,000 over the previous 12 months, then you will automatically have to register for GST. Okay, so really important to remember, you don't need to be incorporated to have GST be applicable. Once you've registered for GST, which you can do online on the CRA website for free, okay, once you register for GST, you have to start charging your clients for GST. And if you're an online platform, it'll depend on you know, where your customer resides. So a lot of the online platforms will assist with changing the tax codes accordingly. One of the advantages, however, is you can register for GST before you've reached the $30,000 threshold. And one of the reasons to do that is you get tax credits. So anytime you have expenses, you're paying GST. And what you can do is accumulate all the different times you're paying GST and offset that against the amount of GST you're collecting. So sometimes if people have a lot of expenses coming up, what they will do is they will register for GST very early on so that they can take advantage of the GST that they're paying other people to offset any GST that they're collecting. Please note, however, that if you register for GST before, like really early on, the $30,000 limit doesn't apply. The second you register for GST is the second that you have to start charging your clients for GST. Okay, great. So if anyone has any questions on the incorporation side of things or GST side of things, please let us know. And we're going to get in here to intellectual property. So what I'd like to do then for the remainder is I'm going to touch on, oh, great question, payroll. So payroll is an associated number with GST. So I can explain it a little bit. When you incorporate a company, you're going to get what's called a business number. A business number is what's used by the CRA for tax purposes, and then you will use that business number to get your GST. You will use that business number to get payroll. I highly recommend using a payroll provider so that you don't have to do payroll on your own. There's a lot of great ones out there. WagePoint, Humi, Ceridian. These are all great and kind of take the pain out of payroll. We have a question: does a board of directors dilute strategic control? I'm not sure exactly. It's tough to answer that. So a board of directors doesn't own any of the shares, okay? And a board of directors will be part of the strategic decision in how the company operates. Is the easiest way to answer that. Some other questions around GST. Are GST numbers published anywhere? Well, first of all, you are obligated to publish it. So if you do get a GST number, you have to put that on every single one of your invoices. Okay, so that's important to know. And how much does it cost to get a GST number? It costs absolutely nothing. So you can get it directly from the CRA. You can either call them, and it's actually reasonably quick right now to call, or you can do it online. Okay. I'm not going to go through the payroll platforms right now, but we can do some quick typing after the fact because we'll just be running short of time. Lynn, great question. How do you compensate your directors if they're not owners of the company? Well, that's up to you as a business owner. Okay.
One more quick question.
Yeah,
there.
absolutely, Mark.
So this one come through our way privately, but just going back to the structure, can a husband and wife both be sole proprietors of the same business? I feel like maybe what they're getting at there is like, does the liability carry between the married couple, or maybe is
great question. So first of all, it wouldn't be a sole proprietorship then. It would automatically be a partnership. Okay, and the same rules would apply, right? So in terms of the partnership, there'd be nothing necessarily unique about it. So yeah, they both would be liable in those instances for sure. Okay, so we have some questions about, there's a really specific question, and I'm not going to get into it. It was just sent to me privately. So there's just too many people on the call right now for us to get into really particular details. I can try to stay on a little bit after and answer, but so what I do want to get to, because we're getting some questions on intellectual property, and this will be the last section that we'll touch on before we open it up, I think, to some final questions, is intellectual property, copyright, trademarks, and how all of that stuff works. It happens, and it's really, this stuff is good to know because it'll be applicable day one of your business, whether or not you know it or not. So intellectual property. This is the symbol here for copyright. Okay, and what's a good example of copyright? Well, I created these slides. So because I created these slides, I automatically am the copyright holder of these slides. I'm the author of the copyrighted work. And what does that mean? Well, that means that I get to do what I want with the slides. I could sell them. I could put them online for free. I could do a presentation and then tell BusinessLink, send them to everyone. That's good. So that's the benefit that I get from being the copyright holder. So what is copyright? It's the exclusive right to reproduce, perform, and publish an original creative work. So if we use the same example I just did, the original creative work are the slides. And because I'm the author of it, I have the right to reproduce, perform, and publish it. Okay, so copyright is applicable to so many different things. When you write an article, a blog article, you are the author of it, you have copyright in that article. If you have hired someone to do a logo for your business, the designer of the logo is the copyright holder. And you're like, well, I paid the designer, so does that mean I get the copyright? Well, only with a legal agreement. So that's why it's really important when you're thinking of all these different things. If you're hiring someone to do a logo for you, or if you're hiring someone to make a website for you, you want to make sure that part of the process you have is that there's a transfer of copyright so that you are entitled legally to use that copyrighted work for your own business in the future. Okay, so it applies to source code and logos and articles and music and all these different things. Okay, the unique thing around copyright is it's automatic. You don't have to do anything to get copyright in your original work. So we've covered those first two things. It's automatic, and you should be including it in a written agreement. The last thing to keep in mind is in employment scenarios, the way it typically works is if I'm an employee of BusinessLink, for example, and I'm doing some work for BusinessLink, BusinessLink would be the copyright holder of any work that I do for BusinessLink, just by virtue of the fact that I'm an employee. Now, again, it's extremely important to put these different clauses in the employment agreement so that it's crystal clear for all parties. Okay. Great, so that's how copyright works. And then the next section we have here are trademarks. Now, trademarks are different. I think it's reasonably common for people to get confused between the two. Trademarks are all around protecting your brand. Okay, so you know, with our company, for example, we have registered a trademark for the word founded, and we have it registered as it relates to legal and business services. Okay, so common trademarks, if we want to think about Starbucks, for example, the Starbucks name, the Starbucks logo, the Starbucks shade of green are all different trademarks that they have gone ahead and registered. Couple things to understand with trademarks. It's not automatic, so it is something that you would need to go ahead and register with the government. It is done on a country by country basis. So if, for example, you're operating in Canada and the United States, you would need to do two separate trademark registrations. The timeline to get a trademark is like 18 months, so it does take quite a long time. And it is reasonably expensive in that it would cost, on government fees alone, about $400, $500 plus legal fees and stuff like that on top. Okay, so good to understand the basics of intellectual property here as it relates to your particular business. If you're just operating a local business, then it would be pretty uncommon to worry about trademarking. It's more if you're operating something on a more national or international scale, and where brand is really important to you. Okay. We have a really good question about independent contractors employment. So we're not going to cover the employment section today, but I just wanted to highlight one thing on that. An employment agreement and a contractor agreement are different things. Okay, they both involve the hiring of a worker. When it comes to an employment agreement, it's an employment relationship that has been created, and in that type of scenario, with an employment, you know, the employer needs to provide the equipment for the employee to do their work. The employer can tell the employee when to work, and it's usually a one-to-one relationship. In the employment relationship, we've already talked about payroll. You need to do payroll, which means every paycheck is going to have a bunch of remittances to CPP and EI and taxes deducted from the actual salary. A contractor, instead, is someone who would do work for a lot of different clients. So it would not be that one-to-one relationship. So if I'm a logo designer, I might be doing logo work for, you know, 50 clients in a particular year. And in the contractor example, the payment is just done on a full basis, and then it's up to the contractor to deduct their own taxes at the end of the year. Okay, so understand that there's two different options there, and that it does make a difference. Okay, so I do want to leave. Sorry, go ahead, Mark.
I think to add, Derek, just because we got a really interesting window into this with when COVID-19 first started about this difference between independent contractor and employee.
Yes.
That a lot of supports the government was calculating was based on people on your payroll, and independent contractors weren't counting. So
Yes.
some things can be, important to consider from really holistically.
100%. That's a fantastic point. Yeah, absolutely. So the last thing that I wanted to do here is, so we've covered employments a little bit. And the last section here is just terms of use and privacy policies, okay? So this is as it relates to, you know, you're running your business and a portion or all of your business is online, okay? There's two agreements that you should have a basic understanding of so that you can properly operate online. The first is a terms of use or terms and conditions. This is going to be the basic contract between your business and the users of your website. Okay, it'll say things like what's confidential, how does intellectual property work, if someone creates copyright on your website, who owns it, and things like that. This is not mandatory for every website, and it really depends on a case-by-case basis. The next example we have here is a privacy policy. And the way Canadian law works now is a privacy policy is basically a requirement for any business that has an online operation. And when it becomes effective is anytime the business does any sort of collection of private information, personal private information. So someone's name, someone's email, someone's phone number. These are all instances where you would be required to have a privacy policy. And then you would need to disclose in the privacy policy, what information are you collecting? How are you keeping it secure? And how can people contact you if they have any questions about it? Okay, so we have just done a complete whirlwind of legal concepts for small businesses. So I wanted to just stop here with 5 minutes left and open it up for questions. A couple things to take away here. We had some questions earlier on about what I was talking about in terms of the platform. This is the company that we operate. It's at founded.co. If you have any particular questions, feel free to write us, help@founded.co, and our team will be happy to answer. Please note that we can never provide legal advice. We are not your lawyers or a law firm. We're a technology company. What we can always try to do is provide information. Okay, so if you are asking what should I do, we can never answer that. But if you're asking what is incorporation, we can answer that. Okay, and the last thing I wanted to share here is we do have a promotion for everyone on the webinar today. It's Business Link 20 August, and that'll get you 10% off anything on Founded. Okay, and that's good for the month of August. So with that, we've got about 5 minutes left. And just wanted to take a breath and see if anyone has any final questions before we signed off for today.
Hi, Derek.
Actually, well, yeah, you can go ahead, Lynn. Yeah.
Sure, let's try it.
Okay, hi, thanks so much for the presentation. That's a wonderful one. Very comprehensive and clear. My question is, I have never used your service, founded.co. So you just mentioned that you guys are a technology company. Does that mean that you provide templates to us so that we can go to lawyers, cut down the hours they need to sort of process the paperwork? Is that how it works?
It's a little bit different than that. We just automate the whole process. So you will answer like easy questions like how many owners are in your company, how many directors and things like that. And then our system will automatically prepare the paperwork, automatically file it with the government, automatically send it to you for electronic signature and things like that. So we have everything from incorporations to employment agreements to website terms of use. So we run the gamut. Feel free to just go to the website, have a look, and then if you have questions after the fact, be happy to answer them.
I guess every company has its own scenarios and situations. How do you tailor that to their individual needs in those paperwork?
I'd be happy to show you. So just feel free to take a look at the website, but we have tons of technology. We have a whole team that's built this to make it tailored for every business that's on our platform. I can tell you we've got literally thousands of businesses all across Canada that use Founded as well. So
okay, thanks so much.
Wonderful. Well, great. I think that might be the last. The last thing I want to say is just congratulations to everyone. Taking the entrepreneurship step is really exciting. It's a lot of hard work, but there's a lot of upside to it. And there's a huge learning experience, and I just wish you all the best. And if there's anything that we can do to support you as entrepreneurs, please let us know.
Yeah, thank you so much, Derek. You did a really excellent job kind of condensing a huge amount of information into something really digestible and valuable. And we're seeing that for sure in the comments. So many thanks for your time and effort here today. We just want to remind everyone, if you'd like to contact us at BusinessLink as well, you can email us, ask us at businesslink.ca. Joy has put the number in the chat previously, and there are lots of other ways you can find that. If you're looking for one-on-one advice, and that can be, some of these really generalized types of where you need to go, BusinessLink can help you with that. But anything else about your business as well, if you need some idea about marketing, who's your target market going to be, a whole bunch of different types of concerns that business owners have. We're a perfect resource for that. So please do reach out, visit our website, businesslink.ca. You'll also receive an email following this webinar with a link to a survey. If you could take 5 minutes to fill that out, we would really appreciate it. Finally, just thanks one more time, Derek. I know Founded has been a great service. So I'll just briefly say I used it myself and found it wonderful. I think you guys are doing great stuff. It's making it easier to be an entrepreneur, and I'm really grateful for that and your contribution to our community today. That's
great to hear. Thanks so much, Mark. I'll just add one last thing, as we do presentations like this all the time to different organizations throughout Canada. And as Albertan myself and all of you should be really happy that BusinessLink exists, because it is really the premier one in all of Canada as it relates to helping entrepreneurs. So it's such a wonderful resource for Albertans.
Oh, thank you. Much appreciated. All right. Well, everyone, take care. Enjoy the rest of your days, and best of luck with your businesses.
Thank you.